We're back with our first interview of 2015. Frank Holmes joins us. Frank, good to see you. Happy New Year.
Happy New Year to you all.
Good to have you back, Frank. Now let's talk about the big news of the new year and the euro slipping to a 9-year low. So the question is, low euro, does that mean higher US dollar and bad news for gold?
Well, it's bad news for all commodities, but it's the biggest peace dividend around the world. $1 billion a day. That makes it so much easier for China, India, Vietnam, Indonesia, many of the countries in Africa and South Africa to have a huge cushion of more money to be spent. And I think in 6 months, we'll see the emerging markets start to take off.
And Europe's an interesting situation here, Frank, because the low euro could hurt gold. Yet, what about that uncertainty that we're seeing in Europe with Greece and Italy and Spain? Could that not be helping gold?
Well, it is helping gold if you're a euro, in euro dollars, because the 5-year German bond is paying you zero. No, nothing. So you have a negative rate of return if you're going to go buy a German government bond. So it's only wise to buy gold. And I wrote a piece recently that showed that gold was the second best performing currency when you make gold as money in the world last year. Number one was the US dollar. Bullion was down just less than 2%. But when you converted it to these other countries' currencies, the gold as a money was spectacular.
Now, Frank, before we get into opportunities and threats here for the gold market, are you surprised by how gold has started off the new year? Many traders we've spoken to are bullish on the metal this week and next.
Yes, well, I guess the Goldman Sachs coming out with comments that they feel that gold is going to hover around $1,200 for the next 3 years, whereas a year ago they were very negative and talking down gold. Gold went through a spectacular rally, if you recall, for the first 6 months of 2014. Then the dollar took off, and then gold took it on the chin. But the other factor that hurt gold last year was PMIs. The PMIs from China in particular, that did impact the retail gold consumer for the love trade.
All right, on to opportunities now. One I definitely want to address with you is the New York Fed Reserve recently saw a 42-ton withdrawal of gold. Now, in your morning commentary, Frank, you write that the recent rise in gold repatriation from countries like Netherlands and Germany is a sign that the global market and political uncertainty is on the rise. And gold is increasingly valued as a haven asset. Let's talk about that 42-ton withdrawal and what it really means.
Well, I think it's just part of the law of unexpected consequences of FATCA. FATCA is the Federal Reserve with the rules they came out with regarding checking money around the world, etc. It's had these ramifications that show up. And then you add on top of that Frank Dodd. 2 sets of very significant rules and regulations that all of a sudden people start feeling unsafe and they start to bring back my gold. And there's lots of that conversation that's around the world.
Another opportunity for gold is how it responded positively to news last Friday that China's central bank was considering loosening liquidity requirements for the country's banks. Frank, good news for gold here.
Bad news is good news. And that's the important thing to remember going into 2015. Bad news is good news because all these countries from China or Europe are going to go to negative interest rates. They're going to pump money into the system. They're going to do everything to stimulate economic activity. And this will end up showing up in higher gold prices.
Okay, but this news might not be bad news, which is good. The U.S. Mint said it is headed for its biggest annual decline in sales since 2006.
Yeah, but still, I think it did spectacularly well. The big issue is the bullion ETFs. They saw the redemptions, but we saw this huge movement of gold and big bricks going to Switzerland, being melted down to smaller bars and finding their way into China. So there's some shift taking place with regard to the global dynamics of money being backed by gold. Will the renminbi be backed by gold? Is that their long-term theme in China? That's great speculation. We do know that last year, in the second part of the year, the Chinese allowed the convertibility of renminbi into Singaporean dollars. Singapore has a huge saving of gold in their own safety deposit boxes there. So I think there's some positive developments taking place for gold.
All right, looking at threats now, Frank. News coming out of Chile that they may soon be presented with a new mining bill.
Well, it's a real theme we've seen in many countries in Latin America and Africa. Populist, socialist policies that basically move the goalposts, that frighten away capital. Capital will not go into those countries. The only country to really do that reversal has been Ecuador. They had a disaster what they did, and they've done everything to bring back in Lucas Lundin and to develop the Norte property. So I think that it's a very big danger. All this will do, negative news is good news, it's going to restrict the supply. We're not going to see lots of buckets of copper and fresh ounces of gold coming into the economic engine of the world, because these countries will turn around and prevent the necessary money to develop these resources.
So, Frank, are you saying that if union leaders were to become the only authorized negotiators in wage bargaining, this could hold up mining projects?
Well, absolutely. And that's what you see in a lot of the issues from Mexico all through Latin America. The unions are a political party. And what's amazing always is that union dues don't get taxed.
All right. Finally, Frank, it's a big week this week. We have all eyes on Europe and jobs numbers coming out this Friday. What could be the touchdown pass for gold?
For the touchdown pass for investors to recognize what is the DNA of volatility of gold. What in a rolling 20-day period, 1 month, plus or minus 10%. It's a non-event for gold to go up $100 or down $100. Learn to live with that as we go through 2014, end of 2014, push through 2015. It's non-event. Gold can easily jump $100.
Well, thank you, Frank. I know I feel very energized after speaking with you. All the best. We'll see you next week.
Happy investing.
And thanks for watching our first interview of 2015 with Frank Holmes. You can email us at newsfeedback@kitco.com. See you tomorrow.